Welcome back to the channel. Super excited to get into this video because we're going to be talking about a concept that completely shifted my paradigm about how trading works as far as price action and finding high risk to reward setups that really catch the beginning of new trends. And it's something called liquidity. A lot of you know, if you've been watching this channel for some time now, that I trade a couple of different things, but really mainly smart money concepts. And essentially what liquidity concepts are going to be about is we want to find areas in price, regardless if you're trading NASDAQ, if you're trading Forex pairs, commodities like gold, we're going to want to look for a couple of different patterns. And so I'm going to start off using some drawings here to kind of give you an idea of some of the schematics that I like to look for. So typically with liquidity concepts, what we're going to want to see is price form either a support or resistance level, right? Essentially just a point of price where we're going to see that those lows or highs are maintained until eventually we see a strong break of that. Let's say we have a support level and we break structure below that. This is where liquidity concepts come in. We understand that there is going to be a lot of stop losses, a lot of liquidity resting below things like equal highs or equal lows. So once we break structure, if we are to maintain a bearish structure, we need to respect the highs and then continue to make new lows. So when it comes to trading reversal patterns with liquidity in mind, what we want to see is that liquidity get grabbed, structure breaking, but then what really reveals this is when price shifts structure. This is the beginning of a reversal in the market, and this can lead to some seriously big moves with a high risk to reward. Now, just like any other concept or any other strategy that you're going to try to add to your repertoire, there's going to be moments where it doesn't work 100% of the time. Sometimes you can have a liquidity grab one way and then another liquidity grab, and then price ends up dropping the other way anyways. So does it work 100% of the time? Absolutely not. But this is essentially the schematic that has really allowed me to find a lot more clarity in the markets and catch, again, low risk, high reward opportunities consistently, catching the beginning of new trends. So I'm going to show you some examples of recent price action as of March 10, 2024. This is something that we recently had our eye on with NASDAQ. So first and foremost, we're identifying a couple of things, right? We got to zoom out and look left to understand what's happening to the right. So if we want to look at this entire range right here, we want to identify swing highs and swing lows. So if we really look up here, we have this high, and then we have this low, and we have this lower high formed over here. And really the range that we want to focus on is from here to here. We want to identify trade setups that can happen within this range first and foremost, because in price action, we're either going to continue pushing lower to clear this low, or we're going to shift direction and come for this high. And price will continuously do that over and over and over, seeking liquidity in the form of either equal lows, equal highs, old highs or old lows, etc. So again, we're really interested in just looking at this range first and foremost. And so right now, if we just see where price is at this 17,929 level for NASDAQ, a couple of things that stand out is we are starting to see some equal lows being formed here. We have price touching here, price touching here, price touching here. Now, it is important to keep in mind that I don't just use liquidity as a singular concept where that's all I look for. Something that stands out to me on this chart as well is the imbalance that we have from the volume that came in on NASDAQ right here. So when we start to pair our concepts together, things like liquidity and imbalance filling, that can lead to some very strong trade opportunities. So essentially, liquidity reversal patterns that we want to look for is identifying, okay, we need to see price. If we're going to go, bullish, we're going to need to see price break lows, shift structure above this high, and then we will start targeting highs like over here, and then eventually over here, right? If we're gonna go for bearish setups, then what we're gonna want to see is price break higher and then break lower, and then we can go and catch the reversals. So we're gonna take a look at what happened here. Now, obviously timing is very important in the market as well. If we look back at price action at this point right here, we will see that this was roughly during London session at around 3 in the morning Eastern time. Okay, and if you've back tested or really looked at price action for NASDAQ, you'll see that there are sometimes moves that start to take place during London session, and then mainly we like to trade it during New York. All right, but we are in one of the prime time sessions where we can find opportunities. Now, we will kind of fast forward here and replay. And so right here, we see a strong push to the downside. We're gonna go ahead and drop time frames to the 5-minute. All right, so as of right now, if we continue to look at what type of structure has been formed, again, we have this high, we started breaking lower, pull back, lower, pull back, lower, pull back, lower. So there's nothing that tells me bullishness as of right now. We are simply just making new lower highs and lower lows. So let's continue to replay, because now at this point we have started tapping into the liquidity here. We've already taken out these lows. We started filling in some of this imbalance right here. So we need to pay attention to how does price react at this point. So what we would need to see for a, again, bullish setup is, now that we have these highs and lows defined, we need to start breaking structure above here in order to shift bullish. Until then, we need to be focused more on shorting the market or simply staying out if we anticipate a reversal. So we're gonna go ahead and allow this to play out. We start seeing some rejection once that low was grabbed. Here we start seeing that we are now breaking above the high. And here we have officially almost started breaking the high. At this point, if we've wicked above it, you can almost consider that basically the shift of structure. What we really like to see is a strong break and close above the previous high to really confirm it. So maybe one more candle, we start seeing a little bit of pullback. Here we start to really get a cleaner break. All right, so from that point, how would we trade this? Well, there's two things you could do. You can either outright just buy off of the shift of structure right here, or if you want to wait for a pullback, you may be able to get in at a lower price point. The only thing with that is sometimes you won't get the pullback, and if you don't get the pullback, you're basically going to miss out on the opportunity. The pros of waiting for the pullback is that you obviously get a better entry with a tighter stop loss that increases the risk to reward factor. So it's a catch-22 situation, right, where you got to kind of outweigh what matters more to you if you just don't want to miss out on the setup and just take it, or if you want to just be very patient and try to maximize and minimize your stop loss as much as possible with that specific setup. So if we're going to be trading these concepts, essentially we buy the break of the shift of structure. So now we can see again, we had this low get violated, and we know that that is confirmed when we break above the high that put in the new low. So again, we had this little pullback high. Here we make a new low, but now we see that structure has shifted back above it. That is the signal that this officially is a textbook liquidity grab, a fake out in the market that signals the beginning of a shift of trend. Now, once we have that, what are the targets that we can start to anticipate for price to come back to? So obviously this high, right? So we're going to be looking at all the highs that liquidity can come and basically rebalance, right? Now, the only thing with this high is obviously your risk reward factor is very, very low. So the next real high that makes sense in this range is going to be the high at 18,152. And that will create a strong risk to reward ratio trade, about roughly a 4-to-1 risk to reward ratio, which is beautiful, right? If we were to extend past that, we would basically be gunning for the high all the way at the top of this range, making this trade a potential almost 8-to-1 basically risk to reward ratio. For this example, let's go ahead and just be a little bit more conservative and just mainly focus on targeting this high for a 4-to-1 risk to reward opportunity idea. So again, we have confirmed that price has shifted structure because we've climaxed at this high, pushed lower, pull back, push lower, pull back, and here we formed a new low that gets eventually shifted in structure, signaling the beginning of a reversal where we will start to look at old highs for targets. And so if we go ahead and play this out, we see the targets get hit right here. And then price even goes on to continue towards the further targets, but assuming we just go ahead and take profit here, this is a beautiful example of what we like to look for. Liquidity grab, shift of structure, and then we start targeting old liquidity from the other side of the market. So we grabbed sell side liquidity here, targeting buy side liquidity here, and structure really confirms everything. So this is a very powerful concept you're seeing on NASDAQ. Now, some people may wonder, does this work across the board, across different assets? We're gonna look at EURUSD. So if you watched my last YouTube video, I talked about something called Tap to Trade. It is a service that is provided by myself and our company Schematics, where we're essentially looking at trade opportunities for our members. And essentially all you have to do once you receive a notification when we call out a trade is simply approve it, and that trade will be taken on a MetaTrader account on your behalf. So this is a trade that I just recently sent for Tap to Trade, and it's basically using the same concepts we just saw on NAS 100, right? So we're gonna take the replay tool again, and we're gonna take it back to right over here. So a couple of things, right? We understand overall what direction are we in on EURUSD. From here, we see a liquidity grab example with a shift of structure making a new high. Price pulled back, started making new highs. So overall, there was some great examples in here, but that's not the trade we took. This is just to show you that we are overall on a bullish pattern. So I was looking for buy opportunities, right? So just looking and marking off points of structure, we have this low, this pullback. And so this range right here was very important for identifying this trade. Because again, it's not just liquidity concepts, it's also things like supply and demand that I use when I have my approach. So essentially we had this nice area where price pulled back that put in a new high. So if we mark off this area of demand, this was something that led to the beginning of me looking at this opportunity. So essentially we tap into that. But if we're gonna just look at liquidity examples here, what we saw is prior to the move that we're about to see right now, we see that price created this level of liquidity here. We saw that price basically consolidated for some time and then eventually broke. A lot of people are gonna see that break a structure and really wanna focus on selling. However, we have to keep in mind the higher time frame was showing that we were in fact very bullish until we broke below this low at 1.08670. There was no true confirmation that we were really bearish. This was just a short-term push to the downside to retrace into the swing low that continues to put in new highs in the market. At least that's how I perceived it. And in this example, we see how this does work in our favor. So we tap into this area, liquidity has been grabbed from all of these lows here. And now essentially we want to see price break this high for our confirmation of shift of structure once again. Because again, if we look at structure points right here, we have this high, go here. And essentially this is the last little high before we put in this low. So for us to really confirm a shift of structure, again, back bullish, we're gonna wanna see price break this level of 1.09 essentially. And so that would trigger the buy signal right here. And in this example, I had used a 30 pip stop loss, basically just keeping it at the low, anticipating that once we do break above this high, we should not be breaking lower again. Now our first target's obviously again the high of the range, but the risk to reward is not great on that. It's about a half our multiple. So we're gonna want to target something a little bit further. If we actually zoom out to the 1 hour time frame and start looking at other things we can try to target, we see that there is this old high at 1.09326 on EU. Now, again, if we're overall bullish and we're trading liquidity concepts, we know that this is a old high that is gonna be low resistance, right? It's gonna be a good chance if we start pushing really deep into this range that we're gonna end up taking out that high and grabbing that liquidity. So boom, we have that as a good target. Let's jump back down to the 15-minute. And for simplicity purposes, I'm gonna go ahead and delete some of these structure points so we can really focus on really the main range that we're looking at right here. We got this high, this low. We were respecting this area of demand. So as long as we start shifting above this high again, we already grabbed liquidity. So that's good. This is the beginning of this tap to trade idea that was sent out. Again, if we target this price right here, this is about a 1-to-1 risk to reward ratio. I always have a standard typically of about at least a 2-to-1 risk to reward ratio on my trades. Ideally, I like to go for at least 3-to-1s. But a 2-to-1 is definitely a baseline, decent profit that I'm happy with. And so we will allow price to play out. Now, again, we saw that with NASDAQ's example, we were in the middle of London session. Here we are in prime time New York session. This is 9:30 a.m. Eastern time. So timing and price are very lined up for this trade to work out. We see that nice 15-minute closed right above the high. A lot of momentum in our favor here, going with the trend, and we see that again liquidity has been grabbed. So now let's see, and we see the price now very aggressively breaks above this high right here, shifting structure, officially confirming this as the liquidity grab. We are now in a trade, and we allowed this to kind of play out. Obviously the market for EURUSD is not as volatile, or doesn't really have the same average daily range as something like a NASDAQ. But nonetheless, it did create the move during that New York session. At this point, we're already up about 1.3-to-1 R on this one. And then price obviously is going to slow down for the day. But eventually, after some news the following day, we see that price gave us the TP smack right there. And so very similar to the NASDAQ example, we want to identify that price grabs liquidity, shifts above the highs, signaling that we are again bullish, targeting multiple R's, right? Whether it's 1-to-1s, 2-to-1s, 3-to-1s. And that's really it, guys. That is how I trade liquidity concepts. First, we need to identify equal highs and equal lows, wait for price to grab that, and then wait for a shift of structure back above the trend. And that's when we get in. And so you can see it's a very powerful concept, again, that works across the board regardless of what you're trading. So I hope this was helpful as far as helping you guys identify some really great trade ideas using liquidity concepts. Until the next one, hope you guys have an amazing day, and let's run it up.